internet and social media are doing is giving those people a voice. It's not being muffled anymore by having to penetrate the different layers of bank bureaucracy. It's straight out there for people to see.
Hello and welcome to the Banker's Masterclass on the value of transforming banking operations. My name is Brian Caplen, editor of The Banker. I'm here with Martin Boyle, the Divisional Director of Business Transformation with UK's Nationwide, and also with Hugh Morris, who is Genpact's Vice President of Banking, Financial Services and Insurance. And gentlemen, we've talked a lot about the challenges facing banking and what we need to do on the organisational front. But one key change, of course, is the changing of generation of bank customers. And now we have Generation Y, as they're known, coming along. So, Martin, they've got very different kind of aspirations and demands of banking. I mean, how are you at Nationwide taking that into account?
Yeah, absolutely. And I think this is going to be one of the big challenges for organisations over the coming period. Is how do you respond to Generation Y or that younger segment, but at the same time carry your older, more valuable customer relationships that principally have a lot of value to the organisation. One of the things we found in Nationwide was people were already voting with their fingers, so to speak, by trying to access our services online through mobile devices. What we found, I think I mentioned it previously, over 40% of people are logging on through mobile devices now, as opposed to going into the branch. And what we're actually finding is people, instead of logging on to the internet bank through 6 or 7 times a month, are logging on somewhere between 16 and 19 times a month. So there's a massive opportunity if we get that interaction to work for us.
Okay, so now Hugh, I think at Genpact you've done a survey on Generation Y and what their aspirations are. So what sort of things have you discovered?
Well, we've discovered exactly as Martin says, that there's a tremendous propensity to want to access services online. In fact, we found that was across the age range, but the mobile technology desires of the younger generation were absolutely there. So they believe that they're taking their portal to the world around with them and they want to access services through it. They also behave differently in other ways. So they are much bigger users, as we all know, of social media. And where traditionally perhaps US businesses have been quite sharp about understanding their social media presence is both important proactively and reactively, we're seeing that in Europe that's paying a little bit of catch up, and that there is quite an opportunity, we think, for financial institutions to take much greater regard as to their social media presence and to how to use social media to their benefit and to their customers' benefit.
Okay, well, on that one, I mean, banks have been a little bit nervous about social media, haven't they? I mean, they can put all their stuff online onto Facebook or something, but it also gives the chance for customers to tell them exactly what they think about the bank in full public view, doesn't it?
I think that's right, but I think that customers are going to do that anyway. So increasingly, people are using blogs, they're using chat rooms, they're using social media sites to express their views of the people and the organizations they do business with. Now, banks know that that's sometimes to their advantage, but sometimes not to their advantage. But on the other hand, you need the stimulus to change and to improve. And that's what the public's providing. What the internet and social media are doing is giving those people a voice. It's not being muffled anymore by having to penetrate the different layers of bank bureaucracy. It's straight out there for people to see. And I think financial institutions are going to have to pay a huge amount more attention to this to protect their brand as well as to grow it.
Okay. Now, Martin, I mean, you mentioned that you have to engage with the younger generation without alienating the old generation. And you've also got the costs of doing everything for everybody, really. So you've got the branch, you've got online, you've got telephone banking. So how can you make this work from a cost point of view? You've still got to carry the old stuff before you actually get to the new place. That's
a great question, Brian, and it's one that we wrestle with constantly. But I do fundamentally believe, at Nationwide, we're committed to being number one for customer service, and that's where we put our money effectively. If we get that service, if we get those simplified services really, really relevant to you, we will find as people move more and more online, the actual cost to serve is lower, but at the same time, balancing that with the level of what we think is absolutely critical to make sure that our more valuable relationships are taken on that journey. And as Hugh says, It takes slightly longer, but there is definitely a susceptibility to want to change. It's making sure that the propositions are really relevant, speak to you, and give you what you need at that point in time. I think in operations, we're uniquely placed to be able to go, what is the total cost of the organisation? Because we look right across the organisation. That gives us a great opportunity then to be driving the service agenda, but also being really conscious on how to drive down those costs.
Okay. Now, Hugh, I mean, with Generation Y, I mean, we hope if they're going to do everything online or by mobile, that we're actually going to bring the costs down. But I have heard it said that they're such heavy users of everything they do, and we were talking about that earlier, that actually there's danger they drive the cost up. I mean, how can banks tackle that one?
Well, I think you need to have an infrastructure that is responsive to customers across the generations, Generation Y, and as Martin said, the older generation as well. And that is quite difficult because as new channels get added, old channels do not get retired. So you not only have to present a consistent brand and customer experience across very diverse channels, the branch, web chat, call centers, online, mobile, but you also have to manage the cost so that you have an appropriate cost allocation and that you have a robust infrastructure. So as you become more reliant upon the technology doesn't let you down, doesn't let the customers down. So at the end of the day, what it will turn into is a scale game. Because the one time you get substantial cost advantage from technology is using it at scale, even if customers then use it more heavily. But we've seen this before. Way back when ATMs were introduced, they were half the cost of processing a check cashed in a branch. So everyone thought the cost would halve. Unfortunately, what was subsequently discovered was that the average size of ATM transaction was pretty much half what the checks were cashed in the bank, so there were twice as many transactions. I think one has to look at it from a customer service, a scale, and a long-term perspective, and presume that by making your processes simple, that is where you will be driving out the efficiency, rather than just saying, oh, we can abandon this access and avenue to the customer because we'll have a cheaper one. Because I think that will be too simplistic an analysis.
Okay, gentlemen, we talked a lot about the challenges. Let's come back in a few seconds and talk about the upside, the business opportunities in this new environment.